Hey everyone, welcome back to the channel. Today, going to take a look at another one of the large tech companies. So, in recent news, kind of the last couple of weeks, a lot of the big tech companies have released earnings, and there's been a lot of volatility in the stock. Some winners, some losers. Facebook looks to have been a loser. Amazon went down and then came right back up. So today we're going to be talking about Amazon, and we're going to take a look, update our DCF, and I'm going to talk about what I think are the key factors when looking at Amazon and how you want to kind of think through the valuation kind of coming over the next decade. So let's hop on over to that and we'll jump into it. So jumping right into the DCF, what we have here, if you download this model, you can kind of click through it, edit it, make changes as you see fit. But we have the income statement. Then I copy that over and we make some estimates on revenue, handful of projections I make here based off different metrics, OPEX estimates, very similar thing here, kind of copy it all over and look at it on kind of a segment basis of AWS versus other. Balance sheet we have copied over, and that all comes into a DCF. Now, I guess first thing, we'll talk through a couple different factors here, just how I'm forecasting some things. We'll look at the revenue first, and then we'll talk through the OPEX. So the first piece is the revenue. Pretty significant growth. I mean, if we look at the DCF in aggregate, right, we're going to be going from 470 billion all the way to 1.2 trillion in the next decade based off my projections, which may seem like pretty large growth for something that's already such a large base, but I actually do think that this is possible. So the way I break this out is we look at each kind of segment within Amazon. So you have AWS, and then you have all their other pieces as well in aggregate there. But what we'll see here is I break out AWS by North American International and look at how those pieces have been growing. Pretty significant growth, and I mean, honestly, this is $62 billion business. I think Google's like a 20 billion. Not sure how big Microsoft is. I think it's probably somewhere between the two because I think Azure is kind of the second largest. So pretty big business here, and I think it's been, it's growing significantly, pretty quick, pretty fast. So I would expect that to kind of continue. So that's what we have, and we have it kind of declining, but ends up at about $260 billion business a decade from now. And they've been investing heavily in this. I think they're definitely, they're the leader in cloud services. So I think there's a pretty good chance that they will end up being one of the winners, if not the winner, in the cloud space. Next, we got online stores. So this is the typical Amazon web, right? It's been kind of growing pretty steady. You saw a huge jump in 2020. I was actually expecting them to like drop in 2021 due to the pandemic. A lot of people sat at home and shopped. It looks like those habits have continued, but they went back to kind of more of a historical growth rate in the low teens. So taking that and kind of having it slowly decrease is kind of the main idea there. Physical stores, they launched a lot of physical stores. They expanded a lot. 2020, obviously, it dipped because of COVID, and then a little bit back up in 2021. I think it'll kind of slowly grow, nothing crazy. I don't think they're going to invest too much more in this. I could be wrong. Maybe they're going to try to be the next Target as well, but I don't see that. Third-party selling services. This is an interesting one. I look at this one as a percent of online store sales. The reason being is this is like third parties that sell on Amazon as well. So I think it's an interesting piece to look at, but I look at it as a percentage of total online sales revenue, and we saw a pretty big jump in 2021. But kind of putting it back towards that historical average, still has it growing pretty quick. Subscription services. This is Amazon Prime. I've done some rough math here to get the number of Amazon Prime users. I think mine might be a little high the way I do the math, but that's fine. What I'm doing, if you are actually interested in this, is you're going to take subscription revenue divided by the monthly price of Amazon Prime times 12. So it used to be $99 a year, and it's actually more expensive if you do it monthly. So there's like a mix issue. So these numbers are going to be slightly inflated because it's using the lowest possible prime rate. And then you'll see it jumped up to $120 in 2018. And then next year, it's actually supposed to jump up, or I guess this year, it is 2022 now. It's supposed to jump up to, I think it's 139, but it doesn't happen until the end of Q1. So you see it a little bit lower in this year and then going back up. So obviously they can increase that. And then you get the number of Prime users. And I think they actually said they're a little over 200 million subscribers. So I'm at 267 is my rough math, but it gets you to roughly the same spot for a calculation there. AWS, we're looking at above by international versus North America, strong growth there. And then other, you'll see historically other was actually growing pretty strong, and then it drops. What happens is this year they actually pulled out advertising revenue, so we'll touch on that as well. So they restated 19 and 20 and pulled that out of the other line. So some of this would have been advertising back in 2016 to 18. Pull that out though. You'll see that this is growing pretty quickly, but I think it's got to start to slow down. The reason I think that is I pulled just some other numbers to note here. And I mean, don't get me wrong, like 31 billion, and it's growing pretty quickly. And I still have it projected to get pretty large, but Facebook does 115 billion ad revenue and Google does 210 billion. So I mean, this is already right a third of the size, quarter of the size, I guess, of Facebook, and an eighth of the size of Google. So that's pretty fast growing advertising revenue. I think that goes across their platform. So I think if you pay for like advertising spots on Amazon's web pages to be at the top, as well as maybe on like their Prime Video, things like that. So pretty fast growing ad business as well, which is exciting. So anyways, that's how you get the revenue. You can tweak these numbers. It's not going to make too crazy of a difference. The big thing here is Amazon flipping on the profitability switch. So the big thing here is fulfillment costs. That's one of their largest costs, to be honest, from kind of an OPEX standpoint, or a cost of goods perspective even. So really, what we've kind of done here is, if we look at fulfillment historically, it's been kind of that 14 to 17, and then it jumped up. A big piece of this is depreciation. They're kind of growing their business, opening a lot more fulfillment centers, and then they're depreciating them when it comes back. So honestly, I expect this to kind of slowly taper down as the depreciation starts to decrease for some of their older fulfillment centers. Now, obviously, if they continue to invest heavily, this number could stay high, and this is going to be a big piece to the overall valuation. But we'll jump to the DCF now, and let me kind of walk you through what this looks like. So with these kind of assumptions, right, you go from a 22% sales growth to 15. I think this is pretty in line for 2022. In their 10K, their press release, they announced they're expecting 3 to 8% year-over-year growth for Q1. Q1 is usually the lowest quarter. So, I think full year, having it ramp and finishing the year at 15% might even be a little bit more aggressive than Amazon is anticipating, but I definitely think it's doable. Cost of sales, this is where that fulfillment piece is going to come through. If they can if the fulfillment centers they've invested in start to pay off and they stop, having to reinvest in these and a lot of depreciation hit. And actually, I think this might be a little bit higher in the next few years, but for kind of showing this model and how much the ability to flip that profitability switch, I've had this decreasing for now. Everything else kind of roughly constant. And then capex is the other big piece. So historically, I think I read something, 2001 to 2019, they had invested like 70 billion in capital expenditures. In the last 2 years, they've invested 100 billion. So they've hit the switch to just like invest like crazy in AWS facilities and fulfillment facilities. So with that being said, I don't think that's going to sustain. I think it will drop back down. So if you put it back at the historical rate of about 6%, which is still going to be double the historical amount, still pretty high. So I think you could maybe even put this down to like 3% and get back to kind of those closer historical capex investments, just depending how aggressive they are. And kind of with all these assumptions, really, we'll go over here to the valuation. You can see, depending what WACC you use, right? But if you were to do 8, 9, 10%, you very much get that Amazon is fairly, if not undervalued. I think they're trading at 1.6 trillion right now. So 9% WACC, that's going to get you 1.6 to 1.8. If you don't think Amazon's that risky, which I mean, it's just behemoth, it's really not, you could easily make an argument this is a $2 trillion plus company. I think kind of after the earnings season ends here and people are more comfortable with tech and kind of the winners and losers shake out, I think we will see Amazon jump back up. But yeah, I think that this is a really good play. And look, if we adjust the capex, right, if we put this back to 6%, back in historical norms, it doesn't make too much of a difference here. You'll see you still get kind of that 1.6 to 1.8. But the big thing here is if you go to OPEX and you say actually fulfillment, because, and realistically, right, they've had a ton of investment these last 2 years. So they actually will have probably a spike in depreciation. So if you do this and add, 0.05% and then hold that kind of constant and then have it slowly decrease, you'll see this actually is kind of the bigger driver. Now you're at about a 1.5 to 1.7 valuation. And, you know, it could get worse, right? If you were to just hold it at 18.9 through the years and not have it ever improve, right, then you're getting kind of more of a fair value currently. But I think that's the whole thing with Amazon. They flipped this switch, right, to basically become profitable. And when they do that, right, if this went back to 17% like it's been historically and just stayed at that, 1.6 to 1.8 easily. So, I think it really is like they do have this ability to just flip a switch at some point and stop, throwing out $60 billion a year on capital investments and instantly become profitable. So I definitely think it's an interesting company. I think it's, a great business model. There's not really anyone else who can compete with it. And, while 15% sales growth may not seem that exciting, that equates to a $70 billion increase in sales, which I think if you look at Fortune 500 companies, it's probably more in sales than 450 of those 500 companies do annually. So that's just tremendous growth in 1 year on an already huge base. So their ability to just increase their margins now is really going to be what drives future value here. But, I think Amazon is one of the winners in this tech game, especially with AWS and even this ad revenue business that they've grown pretty significantly. I don't think they're going anywhere. And I think unlike Facebook, they're not reliant on a social media platform. They're a pretty well diversified business and growing like crazy. So anyways, let me know if you have any questions or comments below. And thanks so much for watching.